First of all, by becoming rich.
Take all your money, buy Bitcoin.
I say when we
You
sell.
wake up every morning and say GM.
GM. GM. All right. Today is Tuesday, 20th of August. G fucking M. All right, so we had a quiet Monday, and then moving into the end, into the close, we saw a nice strong move up, and right off the daily open, pumped higher into Tuesday. So, in terms of where these corrective moves occur from, if I zoom this out and we look at these levels here, what I was talking about here is when the market had broken down from this previous level, if it was going to correct into it, it would come up somewhere into here, fill some of the gap, and then follow the red path and roll over. That would be a redistribution before lower. The opposite happened where it grinds up and then gaps through, so that's a good sign. That's a strong sign. It has just moved up into this other breakdown level and retested it. So this is actually an area where BTC could find yet another top and find yet more resistance and go lower. And don't forget what I said a few days ago about this market being one that's primed for continuation to the downside. And there's more work to be done to make it bullish again, right? So looking at a couple of things here, if I take off some of these. First of all would be open interest. So we have open interest divergences here. OI making new highs while price is nowhere near, right? We have multiple attempts, and when you look at this Binance OI as well, I was talking to this the other day with this, whoever this entity is that's been filling a big position on Binance, but there's a serious build-up of open interest on Binance, and question is what happens when we hit an area where spot supply comes in, which I would suspect is probably above this level at this point. I think it should be pretty easy for Bitcoin to make its way up there. Is the closing of the shorts here, because obviously this open interest build-up is shorts and longs, there has to be both to build up. If the shorts get closed and squeezed out, is it going to produce a valid breakout that holds, that sends us higher, and then we're away and it's off we go? Or is it going to offer a move into spot supply, which then rejects? The same thing happens here. It's basically, if we keep grinding up towards these highs and we then gap through it, it's quite likely the bottom's in and we go higher. If we come up into this area here and we hit that spot supply and it falls back down, that is quite likely then to have been a failure, and the open interest build-up will just have shaken out the shorts to fill more spot sells, and then down we go, probably to new lows at that point, if that has happened. So if we're moving towards that area, that's what you want to watch for. Your confirming signal will be a gap through. But if price moves slowly here up towards 62 in a kind of low volatility compressing fashion, it's actually a decent place to get long, but I'll talk about that in some other videos, probably trade of the day. Because essentially what you're looking for is where does price react and where does price build from. So when you're looking at price coming into these areas here and you have these known areas, you're looking at when it makes its way there, does it break out and hold, or does it reject? That's all that really matters at this point. And you can see examples of both of these, right? Building up, tries to break above, reaches resistance, falls back, forms a consolidation, tops out. Tries to break out, is unable to, right? If it tries to break out and they get sold into, it's the opposite. So anyway, quite a bit to go before that becomes the case. And I would say right now the market is still, it's just in consolidation. I mean, if you look at the higher time frame chart, it's not a bad setup, but we are still below these. Let me go 4-hour chart, right? We've just filled that inefficiency, which is the dotted red line. There's still one above. We have the weekly open below, which is around the Feb 21 pivot. So the red line's the weekly open. So we're green week so far. We have March to July's value area low, which is still above us. So price is consolidating still below that level, and I do suspect that it will make its way higher. The question is, where does it go? Where does it hold? All of that. But I think with the way market's shaping up right now, it depends how it moves, because the thing with this market is, as soon as it starts to look strong again, people are going to start reallocating, getting long, thinking we go higher, and that's where you have to be on the lookout for the trap moves. But you also can't have a one-way bias. You can't just be like, oh, this is bearish, I have to short every way. No. The market is equally able to go all the way to 74, even if it's bearish. If this is just a standard distribution, it can go all the way up there. Take that out and then sell off. So if we're at 60 and it can go to 74, even if you're a bear, then why are you bearish? Like, why are you... Don't be stuck in an idea, a bearish mindset, especially if you're a shorter term trader. And of course, if you're a bull, it can go lower, right? It can still go back down, for me, really, as low as 52. And I wouldn't want to see it go much lower than that previous impulse fill in. And still go sideways and hold and go higher. So don't forget that we're in this sort of range, consolidation, chop, whatever you want to call it. And it'll take time to shake itself out before we get the next clear directional move. And in that sense, it actually does remind me of back over here. I got long down at these lows at 40k, 39k. And initially, I traded it through the range. I got long there, added to it here, and I was actually taking profit up around here on a lot of, not the whole position, but I took profit on a bunch of it at that point, because obviously you don't know any of that's going to happen after. And the trade was take out at the lows when people don't want to buy it, and then sell it back to them at resistance. If you look at the same thing here, if I was trading within this range and targets, I'd be looking at getting long if there's valid reason to get long on breakouts or whatever, and trading it through the range. Right? You don't have to guess again that this is the low and away we go. You can just trade it through the range. And for me, a clean breakout of 70 is where I would start to look at filling high time frame positions again. What matters here is, when do we break this range and not come back to it? Because then you can size appropriately. So it's just this mismatch of expectations and positioning. Like, same on the short side. If you're high time frame bearish and you think the bull market's over, this isn't your best place to form that opinion. If we go higher and reject and come back down, yes. Not when we're on the way up. And if you're actually looking at confirmation for, like, where does this all fall apart? Well, you can say that already it has, because we failed to break out of the all-time high, which is true. And, failed that even on a weekly or even on a monthly. That's true. But where does the confirmation come from? Right? Confirmation of going lower would have to be a break below 55 on a weekly close basis, and eventually a break below 50, which means then that Bitcoin is most likely going to retrace this entire move. And if it does that, then the whole thing's probably over for now. So there isn't confirmation of that yet either. And this should be like very clear. Make this very clear. The reason why the market has been rotational short term, and the reason why day trading has been the preferred style and scalping and all that, is exactly because of this. Because nobody, we say nobody, we're talking about like the totality of the market, right? All the people together and all the money, all the big players, small players. There is not consensus among the supply and demand that we should be going up or down. Like, there's no consensus that it should be going higher than new highs or that it should be going lower than new lows. So when you have a lack of consensus, you get these short-term rotational markets. People are willing to sell but only down so far. People are willing to buy but only up so far. And until something comes along that shifts that, we'll continue in that vein. So the thing that will get people caught, and I've been day trading this, and many of you guys we've been short-term trading this for ages, for weeks. Where it catches people out is for people who don't day trade. And this is where you can use yourself. Your own emotions and psychology can be your best guide. if you're not a day trader, never have been, but you're suddenly starting to consider day trading and building systems and doing all these things, why? Ask yourself why. Is that a signal itself, right? Because just like when the day traders start to abandon their day trading systems and buy and hold, quite often that's a sign of a top. That's what happens at the top of bull markets. People are like, it just keeps going up, bro. Fucking day traders, you're stupid. You're missing out so much money. Day traders then turn into long-term holders. Top signal. Same thing with the opposite, right? Once the short-term trades are more profitable, everybody wants to be a day trader. And that's usually right before that ends. And I think that that's something that we're probably going to see, which either manifests itself, I said this on previous video, manifests itself in two ways. One, volatility dies, so even day traders don't have a good time, or we get a strong trending move. The reason why strong trending moves wreck day traders is because day traders try to go both ways, and they're very hard at changing their mind to stop fighting this trend, because it's been really profitable. If you go to like a lower time frame, it's been really profitable to buy and sell quick, and then short and buy it back quick, and then take profit fast, take profit fast, take profit fast. And then whenever there's a directional move, say it's to the upside, and it just keeps going, that's why I keep going all the way, because they're going to try and, short it here, and short it here, and short it here. And it just trends ruthlessly. So I don't know if that's going to happen. I actually lean more towards the other side, which is that volatility dies, and we see a market that sort of kind of drifts into just a period where not much happens, right? Don't know. It doesn't matter if it's down or up. It's usually down, because when volatility dies, the market usually can't hold up, especially if it comes along with open interest decline, which I'll show in a second. But it could equally be a move higher and then just some chop. And it's really just tight directionless chop before the next big move. In that case, probably be up. In this case, probably be down. Could really go either way. But it's more like a few weeks, 2, 3, 4 weeks of really poor conditions even for day traders. When you start to see that, it means the next big move is coming, and you just have to survive. And again, this is not a bearish thing. It doesn't have to be. Obviously, the market leans bearish, but the exact same thing happened over here, right? We got this really nice move up, and then we got a period where even day traders were just not even having fun, from 14th to 26th. So 12 days, just under 2 weeks of just compress, boom, away it goes. And we actually had the same thing for about a week just before that. And those type of areas, those type of market setups are usually a sign of continuation. Now you got the same thing here after the ETF launch, drop down, and then from the 12th until the 18th, so like for 6 days, there's just nothing. Like this is barely even tradable. For a day trader, it doesn't take the lows, doesn't take the highs. When it does, it comes back into the low. Those signs, continuation, right? Drops down, volatility dies, it's going to drop more. And we don't really have volatility dying yet. It's still enough. It's still tradable. And when I look at the open interest, see that obviously we've had a big spike up in it here today, and since the lows it's been steadily rising, although that's because it's included. Let me get the open interest here, aggregated open interest here. So I want to look at it in contracts terms. There we go. So since the lows, it's about flat. It's up slightly. But of course, we had the first move up, which was the short squeeze, and then some longs taking profit into that. And right now, we still have this build-up. So depends where this build-up's going to go in terms of BTC. But you can see here, right, from this move higher, from this area here, where we had this sort of cluster of open interest building up before the drop, to where we are now, we've seen open interest initially get wiped out and decline, and then rally all the way back up. So the market is, to me, this signals more short-term continuation, because it's a lot of flushing and rebuilding of positions, right? The positions build up, they get flushed out, they build up again, they get flushed out and squeezed. Then as we rally, the positions build up again. So it's a lot of new positioning. And this is only since it's like the last 2 days, right? So in the last 2 days, you're seeing positioning rise and fall and rise and fall, and even extend it back. You're seeing a lot of wiping and rebuilding and wiping and rebuilding and positioning, which is a clear sign of uncertainty and confusion. And again, that doesn't mean that the market's going to go up or down. It's a sign that traders are uncertain. And so if the dominant narrative, or if the dominant idea of the market is bearish, then that can be a good thing. We can go higher. And that's certainly the way it would be leaning so far. I do think that we most likely go to these highs and maybe beyond, unless we start to see some weakness stepping in here. I wouldn't be fading this. It's tempting when every rally fails, and it's easy to sell into them. It's tempting to just think that this will fail again, but I see no reason for why this would fail here. If it's going to, it's going to happen not now, but in the days to come. And if it drops back down, that's where it really matters, right? So, but trade of the day, I'll talk about that. I want to talk about where does this become reaccumulation versus distribution. And you want to keep that in mind. Because right now, the way I see this can very easily just hold and squeeze and then just blast off. And it might not even be bullish. It might just be a big squeeze of everyone who shorted here, and then it just falls back over. You have to understand, like, this can be, it can go so much higher and still be bearish. It can go much higher and be bullish. It's this mindset that really people get trapped into whenever price is barely moving and it's kind of choppy and shitty. It's easy to think that everything's weakness and, oh, it can't even reach here. Now, the biggest squeezes are before the biggest drops. Look at this one, right? The biggest rallies come before the biggest falls. You always take out some highs before you have your deep sell-offs. And if this is a bearish market, you're going to see rallies, counter-trend rallies before the drops. You're going to see the market squeeze up like it did here, where there's a massive drop-off, but it comes all the way up, squeezes here. This is totally normal, whether it's bullish or bearish. So follow the direction of the market, which currently is 58k keeps holding. We're pointing higher. So I would not be looking to fade this or short this just yet. But I'll show on trade of the day exactly where I would see the best potential for that. That's it. GM.